Coming up in today's video, stocks move lower, especially the German DAX, which I have my eye on. The Dow Jones also pushing lower, and the Russell blipping back and forth here. We'll also take a look at gold, which has pulled back, dollar still trying to stabilize, and bond yields are on the rise. Remember to subscribe and hit the thumbs up button as we get started here. Let's go. So across the pond this morning, the European Central Bank leaves their interest rates unchanged despite trade war uncertainty. The European Central Bank has left its monetary policy unchanged after a run of 8 quarter percentage point cuts in the space of the last year. The ECB's main policy rate will remain at 2%, while its deposit rate will stay at 2.15%, the Frankfurt-based central bank announced on Thursday. The policy rate has halved from 4% to 2% in an effort to spur the European economy after inflationary pressures fell back. And just for context on that last part, you'll notice that I've selected for Europe here, and you can see inflation has really cooled off in Europe. And you can see the interest rates here in Europe, I've also selected at the top, have been in decline as we've seen a consistent rate cut pattern, but a little bit of change in the tone here today. In fact, we just got updates that the jury is out to how quickly the uncertainty will be cleared, says Christine Lagarde, referring to the trade war launch by Donald Trump. On the ECB's position, she says, you could argue that we are on hold. We are in this wait and watch situation. So arguably we've gone from a dynamic where the easy rate cuts for the ECB are behind us, and let's take a look at how the market is reacting. Here's a look at the euro today, which was a little bit soft and has bounced back, but it's really the German DAX, which is trading lower on this news because, of course, the German DAX has benefited from the idea of a lot of rate cuts in the last year. You can see actually year to date, the German DAX has done really well, even compared to the S&P 500. In fact, here is a year to date chart on the German DAX versus the SPX. Essentially what I've done here for those who want to do this in TradingView, just type GER40 divided by SPX, and you can actually look at the comparable performance of the two indices. And so what's apparent here is that this year, the S&P 500 has actually underperformed the very strong German DAX. Now with this relative pullback here, the question becomes, is this an opportunity to buy the dip and to continue to see foreign stock markets outperform the US like they have so far this year? In some ways, I think that there is the appeal to diversifying and adding longs in other areas than just the US stock market. But I don't have huge faith that other stock markets are going to dramatically continue to outperform the US. I do think that the US stock market is kind of king when it comes to the best of the best, but the question becomes, relatively on a risk to reward basis, where is the better bang for your buck? So I am actually watching the German DAX as a potential buy the dip opportunity. If we do get a pullback into this 24,000 level, I do think that this could be a nice opportunity to get back into what was a really successful trade for me. I went long the DAX over here and ended up taking profits. I can't remember exactly when. I think it was somewhere around here or here, somewhere in this region I took profits. But now, pulling back into this area where we have found some pretty clear support may be an opportunity for me to re-up the trade and get back into what I think could be a multi-year kind of uptrend for the German DAX. From a longer term kind of big picture view, I do think that other countries are going to wake up to the idea that, a complete total reliance on the US is sort of a dangerous position. If I was another country, I would want to, kind of take things into my own hands and really I would really want to de-risk myself from reliance completely on the US. And so I think that may spur into existence some innovation and some progress in Europe that has been lacking for a long time. It's definitely a contrarian trade because the popular thing to say in Wall Street is that, Europe is this sleepy, no innovation place, where I think that, things can change, things can spur changes. And I think that we are seeing a shift in the mindset of Europe in some ways. Maybe the US is not someone to just completely trust wholeheartedly and just to rely on. And in some ways, I think the US, especially the current administration, actually wants that. They want them to, do their own thing. I've actually seen, I am not a European, so I'd love to get some of you guys' thoughts in the comment section who are, but I've seen a lot of people who are actually wanting this. They want the Europe to kind of step up and to have a fresh industrial revolution, if you will, kind of re-accelerate the concept of innovation and less regulation, more innovation, I think would be good for Europe, as it has been very good for the US. If you've watched my channel for any amount of time, you know I am a Super Bowl when it comes to free markets, capitalism, etc. And I do think that, Europe could be pushed in that direction to make changes, to kind of stand alone on their own 2 feet. Anyways, that's a long-term speculative perspective or opinion. Regards to trading, I do like the prospect of, the economy in Europe seems to be outperforming expectations. I'll show you that. You can see our EU economic heat map here coming in really nicely with cooling inflation overall and employment data that's been okay as well. Now, when it comes to US indices, I am also bullish. However, we've seen a pretty stretched one directional market for some time. And I do think that this market is, due for a healthy corrective technical pullback. I think we're a little stretched on the technicals, but sentiment is still not too extreme one way or the other. Check this out. Last night, we got the latest AAII investor sentiment survey, which showed 34% of respondents saying they feel bearish on the stock market, 29% saying they feel neutral on the stock market, and just under 37% saying they feel bullish. This is still a very neutral/mixed market outlook. So the crowd sentiment is sort of stuck in the middle. Let's take a look at the put to call ratio to see what the options market is sort of feeling in terms of a sentiment perspective. Well, here's a look at the put to call ratio. I've filtered specifically for the S&P 500, and you can see that the put to call ratio is still sort of hovering in the middle between neutral and extreme fear and extreme greed. So not getting a very strong reading. And so this tells me there may be room for the market to continue to march higher because sentiment is not really super extreme one way or the other. And definitely I can't justify shorting this market. I may not be interested in longing. I think the risk to reward is not very good unless you get a pullback. But again, sentiment doesn't seem to be too stretched, which could mean the market has more room to keep going. So could we be entering into blue sky territory where we do not have any major previous levels of resistance above us? So maybe this market just kind of drifts on into the, sky here for a little while. Again, it's not something I'm really willing to bet on per se. Like, I'm not looking to buy the NASDAQ today, but if we were to get a pullback, I think that the risk to reward profile on this looks really attractive. I also wanted to take a look at some retail sentiment to see what the crowd thinks about currencies, which we'll talk about now. When we take a look at USDCAD, you can see that we're getting a contrarian bearish signal. The reason for this is that the crowd, which is 69%, nice, long on dollar CAD, we do see the majority of retail positioning on the long side, right? So people are buying the dip on dollar CAD, and that makes me a little hesitant to go buying it myself, because again, when the crowd is sort of all piled into one side of the trade, oftentimes we see this stay a trend for a while. Let me show you. So what we're looking at now is the historical retail sentiment, specifically for the dollar against the Canadian dollar. So this is retail positioning over time. And you can see for quite a long time, the positioning here has been very long by retail traders and actually has accelerated recently, getting up to 70%, now around 69%. You can see again, retail sentiment is still very much bullish on the dollar Canadian. Let's take a look at the price action. So when we look at the dollar CAD, you can see that we've been sort of in this big picture downward trend. And so people are still making the big bearish bet, making the big bullish bet that this thing is going to have some sort of amazing reversal. However, they've been trying for that for some time and have been on the wrong side of this trade for quite a while. Now, will this eventually turn around? I think yes. In fact, I actually really like the idea of getting long the dollar CAD, but in sort of a sinister, weird way, I'm actually more interested in getting long when retail starts to get short. So what I'd actually look for would be a reversal in sentiment as a possible indicator that, hey, maybe it's now time to buy the dollar CAD. I actually like the idea of buying the dollar CAD if we were to get a breakout, which sort of swings things the other way. Let me expand upon that. When markets are trending down, especially in Forex, I've noticed that the crowd sentiment tends to go counter trend. And a lot of times they're very early to the reversal. They think that they're going to catch the bottom and the market keeps going lower. And so then what happens is when you do finally get the true reversal, the people who were, fortunate enough to buy at the lows, they close out very quickly. Retail traders have a tendency to close out winners very quick and hold on to losers for a very long period of time. You can do that and be profitable doing it, but most traders, unfortunately, they buy too much too quickly and they blow accounts in the meantime. However, if you have the patience to wait for, a move to start forming in the opposite direction, that is where things can potentially be, you can potentially look to be early to the new trend. But again, what I like to look for in a sentiment indicator is actually a reversal in sentiment to the other direction, meaning once the crowd gets really short, that actually would be, to me, a sign that, hey, we might actually have room to short squeeze higher for multiple months. So I'm looking for reversals on things like EURCAD. We can also look at some of the other extremes, like the Australian dollar and the euro, which a lot of traders have been short on. In fact, yesterday, I spoke in person with a trader who I met, who knew who I was, who watched my YouTube videos, and even owned a copy of the Edge Finder. And he mentioned that he was in a euro dollar long trade, and I was really proud. It was really cool. I've met people in person that have known about who I am. This was the first time somebody showed me, like, they owned the Edge Finder, they followed my videos, and I was like, this is so cool. But he, had been trading for 10 years, was super serious about it. We had a great conversation and mentioned that he's long the euro dollar, which is awesome. I mean, that to me, take a look at the euro dollar, this thing, take a look at the euro dollar. You can see there's just a clear upward trend. He's been doing really well with this. And he showed me he was trailing stops and had been in the trade since, several weeks ago, which was awesome. But I wanted to use that as an example because, again, you can see he's just kind of riding the trend here, and phenomenal, right? So we take a look at something like euro dollar. You can see crowd sentiment is still very bearish, betting that this is going to have some sort of holy reversal. And while eventually it will, trying to time that is very difficult. And so we see retail traders typically on the wrong side of these remarkable moves. Again, just look at euro dollar. This is actually even better of an example than EURCAD. Over time, retail traders have been consistently shorting what has been a phenomenal run higher in the euro dollar. In fact, this white line is the price of the euro dollar. And notice how as it moves higher, retail traders get more short. It's a phenomenal thing to study, and sentiment can be a very powerful tool. And I think, I'm a little bit biased, I think we might have the best tools in the industry for tracking sentiment, both institutional sentiment and retail traders. If you don't have a copy of the Edge Finder, take a second to listen to this. We are currently offering a huge discount on the tool. It is 40% off for a limited time, and this is the biggest discount that we offer all year long, is the summer sale discount and the Black Friday discount. But let me give you a heads up. A lot of people are like, oh, I'll just get it Black Friday. We do have intentions to potentially raise the price of the Edge Finder between now and our Black Friday deal. So this is quite literally the lowest possible discount offer that we're doing this year. So do not miss it. If you're someone who's like, oh, I want a copy of the Edge Finder, I'm just waiting around and saving up for it, let me tell you about some opportunities for you right now. If you don't have a copy of the tool, it's our biggest discount of the year. And if you send us a direct message using the first link in the description of this video down below, and let them know you heard about the discount and want to split up the payment into a payment plan, we are offering that for a limited time. So if you want to split it up into 2 or 3 payments to make it easier so that you don't miss the sale discount, we're offering that by sending us a direct message. We can give you some information and make that possible for you. The tool is a remarkable all-in-one place to track market sentiment, to track fundamentals, and to track seasonality in an easy to understand way. We offer what I think is a very powerful product, especially for the price that we offer it at. So don't miss it. Limited time on that, and all the information can be found in the description. Speaking of the euro, things still look very bullish on a technical basis. We look really good here. We found support around the 1.16 level. I wish I had bought that, but I didn't. But I did do well on EURCAD. I actually went long EURCAD and took a profit on that yesterday. And so EURCAD moving up here today. If we do pull back, I'm looking to trade that again. I've just been taking kind of quick hits and moving on, which I trade currencies a little bit differently than I trade, gold, silver, indices, etc. I do tend to take profits a little bit quicker and scale in, scale out when it comes to currencies. I do have a full video on that topic. If you want to learn about my trading strategy, I'll leave it linked in the top right hand of your screen right now. You can watch that video if you'd like. Here's a look at the VIX. Continues to move lower here. Volatility down to 15, which is very, very low. And actually taking a look at our indicator here, the extension zones, you can see we are now entering into true oversold status on volatility. This definitely signals a yellow light when it comes to risk assets like Bitcoin, stocks, etc., indices. This tells me, okay, people are starting to get pretty optimistic about the future and they're not too worried about possible volatility to come. I much prefer to get long risk assets when people are a little bit more scared of them, not when people are feeling overly confident about them. I highly recommend that if you don't have the VIX on your watch list, you should add it. It's a really powerful, simple tool to keep an eye on market sentiment, and and of course to just track expected future moves. When this thing goes higher, people are expecting bigger moves across all markets for the most part. Yes, it's for the S&P 500, but volatility is something that is pretty broad and correlated. So euro dollar is going to move more when the S&P is moving a lot, and vice versa. Here's a look at the British pound, which did find some support around 1.34. The dollar yen is trending back a little bit lower after finding resistance in the 148 to 149 range. Here's a look at dollar Swiss. One of the biggest winners this year in terms of currencies has definitely been the Swiss franc. Here's a look at the Swiss franc against the Japanese yen, which has just been a monster trend this year. And against most currencies, the Swiss franc seems to be very, very strong. Here's a look back at dollar CAD, which I mentioned would be a possible trade for me if we do get a breakout higher. Here's a look at some of the currencies that I'm currently watching in terms of top setups. On the Edge Finder, we've got things like Euro Pound, Euro Aussie, Swiss Yen, EURCAD, Euro Dollar, Euro Yen. These would be our bullish ratings. What this means is that sentiment or market sentiment, right? So retail positioning, crowd sentiment, as well as institutional positioning are generally favoring these things on the long side from a contrarian perspective for retail traders and for a complementary perspective when it comes to institutions. Technical scores, what I mean here is, of course, seasonality and general momentum, and then economic data. So when comparing the economies of the two currencies, which one's outperforming, which one's underperforming, you can see, generally speaking, most of these things on the highest end of the score are going to have solid confirmations between all three categories: economic data, technical scores, and sentiment data. On the flip side, we can actually just click score and turn the scores around. You can see here some of the most bearish assets: the pound against the Swiss franc, as we just looked at for a second there, the pound against the New Zealand dollar, the NZD-CHF, Aussie Swiss, pound CAD, pound dollar, pound yen, and dollar Swiss. And if you stick around for a second, I'll tell you about how you can get the Edge Finder completely for free. And it is genuinely a way to get the tool for free, but I'll tell you how. Our partnered broker 8cap, which is only available to traders outside of the United States, by the way, is offering a really special offer for people who are interested in creating an account and getting the Edge Finder for free. Here's the context. If you head over to our website, a1trading.com/8cap, that's a1trading.com/8cap, you can follow the instructions on that screen to make an account, to deposit a certain amount of money, and then the Edge Finder will be yours for free. Essentially, they purchase it on your behalf if you meet the deposit requirements. So like I said, head over to a1trading.com/8cap and scroll down here. You can see the requirements, what qualifies. If you make these certain deposit amounts, you can get access to a whole bunch of our stuff for free. We've worked out a deal for you guys. So essentially the tools for you are free. You just have to create an account and deposit a certain amount of money into your account with them. So like I said, the full context, details, and disclaimers can be found on a1trading.com/8cap. I hope that video was helpful to you, and I also wanted to make sure to share our Telegram channel with you. Every day we are posting up chart markups and analysis and in-depth breakdowns of what's going on both fundamentally and technically in the markets. We also drop bonus videos in the Telegram channel, so don't miss out. Come join our Telegram channel. The link is in the description down below. Have a great rest of your day.